understand what we can expect from the market going ahead and what are going to be the key resistance levels to watch out for in the upside, we have Akshay Bhagwat as well as Vinay Rajani joining us on the show. Good afternoon to both you gentlemen, and thanks so much for joining us. Akshay, we'll go with you first. The kind of move that we've seen on the market, no matter how much pressure we are seeing, Nifty is still holding above that 25,000 mark. How strong of a support do you think this is, and if you're spotting any recovery on the charts for us?
Good afternoon. So what I understand is broadly we are in a range-bound market for the month of July, and the way we have seen a slight bounce back in yesterday's trading session at the levels of 24,950. That's more of a weekly support, which is slowly building up its base for the coming weekly expiry for the Nifty index. So the sense is that Nifty regained about 25,000 psychological mark in yesterday's trade. That was a positive takeaway. Today it's a bit dull, but I believe this momentum which has picked up yesterday has legs to take Nifty once again till possibly till 25,350 to 25,400. It's more of a trading or a short-term pullback. If you were to broadly look at the entire next 10-15 trading sessions, I think the range which is slowly building up is the base around 24,900 and the upside around 25,500.
Those are the levels when it comes to Nifty 50. But Vinay, what do you make of Nifty Bank as well? Because just yesterday we have seen that stellar 600 points of rally on the banking index, but once again a fall from those higher levels. What do you make of Nifty Bank right now?
Opening higher today, and Bank Nifty witnessed a profit booking from the higher level, and today's high is exactly matching with the previous swing high, which happens to be around 57,300. So for a spot Bank Nifty, 57,300 is a very strong resistance, and overall note yesterday's recovery is still intact, and it has not breached that level. So overall we are expecting some positive move. No doubt in today's trade we have seen some profit booking from the higher level, and 57,300 is a very strong resistance. But overall, if I were to look at the setup, it gives me an impression that at lower level one should initiate fresh long position only. So around 56,400, 56,500, there is a support which can be utilized to create a long position in Bank Nifty. So yesterday's recovery is quite significant, and we should take it positively. And Nifty has taken support at 50 days exponential average, and the strong close was there yesterday. So obviously I'm expecting bullishness to come. No doubt we are passing through the choppiness, but the bias is on the upside, and 56,500 is a nice entry level for the Bank Nifty to go a fresh long position, and 57,300 is a resistance. Once that is taken out, we can expect fresh new all-time highs in Bank Nifty.
So that's the take on Nifty Bank. Let's talk about some financials. Then M&M Finance is in focus. That stock has seen a very sharp uptick in its stock price once the earnings came out just a few minutes ago. The operating profit has seen an uptick of 19%. You have some good moves coming in from the net interest income as well, up 12.9%. So NII and operating profit are much above what we were estimating here at ET now. On the flip side, there's some pressure on the PAT front because that is much below what we were estimating. It's also looking slightly worrisome on the provisions front because that's up 44% on a sequential basis. So looking slightly okay on the provisions front. The NPAs have increased, so that's a deterioration on that front as well. The GNPA and NNPA number both have gone up. In fact, NNPA now at 1.9% compared to 1.8 sequentially, and GNPA at 3.8 compared to almost 3.7 sequentially. So not looking all that good on the asset quality front, but it's the PPOP and the net interest income that are doing well for the stock right now. Akshay, a quick chart check on M&M Finance, and what are you spotting here?
M&M Finance, if you were to look since the beginning of the year, the prices have somewhere respected the levels of 250. Time and again, you have the supports being defended by the bulls. If you were to take more of a weekly view, then 260 is the support which comes into play. I think initially the stock is trying to digest the results, and I believe looking at the broader chart pattern, the downside probably looks capped. So the view will be positive till the stock trades about 260 from short term, and if it recovers, then your first potential target from a short-term perspective is 275, and beyond that 285 can be in the making.
Alright, so that's the take coming in on M&M Finance. Let's watch out for that. For now, we are seeing a bit of an uptake in this particular stock. But other than that, just a while back, we had the numbers also coming in from MGL, and time around, though, on a profit and also on a YOY and along with that sequential basis, we have seen a good increase on the profit figure. But overall, if we see, then there is a one-off of over 100 crores due to the reversal of the discounts to the OMCs. That means that this particular number will actually not go into the books of MGL, and this is a one-off that the company has reported. Just wanted to have a chart check on this one. Vinay, how do you see MGL on the charts? Because just after the earnings, there was a bit of a spike, but the stock seems to be losing all of that.
Yeah, so around the earnings, it is always a challenging task for technicals to give exact prediction. But today, no doubt from the higher level, it has come down. Broadly speaking, it has got a strong resistance at 1560. This needs to be tracked on on a closing basis. So 1560 is a very strong resistance for the counter. And on the downside, I see support around 1460. So that's what we can comment around the result season. So we need to see whether it sustains above the resistance or support or not. Accordingly, we'll take a decision. But as of now, I can share the resistance and support level. 1460 is a strong support for the counter, and around today's high, there is a strong resistance which is 1560. So this 100 points range we need to track. Either side movement, decisive movement on the either side will decide the further trend. But till that, one should wait and watch.
Okay, so that's the take on MGL on the charts. But Narendra, coming back to you, let's talk about Colgate's earnings, and not specifically Colgate. I want to get your sense on the entire staples sector. Colgate is the first one from the staples basket to come out with its numbers today. It's been a miss across the board. Despite having muted expectations, the numbers have been a miss even on that. What are you making of what we can expect from the staples side of consumption this time around for quarter 1?
Yeah, I think staples should improve, seeing how the inflation has been falling down and the prices have also been lower for a lot of raw materials for these companies. So the performance on the front of margin should improve going ahead, as well as the demand side environment should also improve. However, what we have seen so far from the results is that the growth is not picking up momentum early on, and I think maybe when the festive season starts and the impact of monsoon comes off through agriculture. So from Q2 onwards and in the second half, I think the growth is expected to be much stronger than the first half for this sector. So I think the next quarter onwards, the growth should improve gradually, and the full impact of rate cuts and the lower raw material prices would be seen from next quarter and significantly in the H2 of the current financial year.
All right, so that's the take coming in on the staples. But anything within the cement pack that you are liking at this point in time, Narendra, given the fact that for Ultratech, the commentary did not give that much of a push to that heavyweight, or rather the largest one within the cement pack. But apart from that, any other stock or space that is looking good to you, because cement players are regionally divided as well?
Yeah, definitely. If you see the results this season, cement is one of the space which has been come out stronger in terms of results. And coming to the medium to long term outlook, I think the infrastructure space overall continues to remain strong with a lot of execution happening from the government side, and considering the overall spend pipeline of the government, which was muted last year. So this year it is expected to be coming back. So I think the sector would continue to remain favorite, and the performance would continue to be strong for the sector. Coming to the stock specific, we are more positive on tier 2 cement companies in comparison with the large caps.
Referring the second order companies compared to the large caps. But Narendra, on that note, we'll let you go. Thanks so much for joining us. Time now to get in some technical ideas and stock specific recommendations from our technical experts. We have both Akshay and Vinay. Vinay, you go first and give us a sense of some BTST trades. Where would you be placing those bets for today?
So I would pick one stock from the auto space which has not performed that well till now. It has been into consolidation phase. That is Maruti. So Maruti today it has recovered from the lower level and is going to form the bullish hammer candlestick pattern on the daily chart. It looks like that after some consolidation, it is here to give some participation in the long side. So Maruti around 12500. One can go long. I would suggest a trading stop loss at 12,250. On the higher side, we can expect a target of 12,900. The second pick I would take from the FMCG space. So after a gap up opening, the stock like HUL, we saw that it has shown some running correction and it has partially filled the gap which was there. The gap was formed on the day when some positive news management change was there in the company, and it has come to that gap range and it can act as a support. So HUL is looking good. The overall charts are very convincing. So around 2475 one can go long. I would suggest a trading stop loss at 2420. On the higher side, we can expect a target of 2560 in next couple of sessions.
All right, so those are the two buy calls coming in from Vinay. But Akshay, what about you? Which are your stock recommendations for now?
Yeah, so first one I've selected from the FMCG pack. The stock name is Dabur. The current market price is around 515. So if you recollect, the FMCG space has been doing extremely well in the last 1.5 month. And in the last 4-5 sessions, Dabur has given a slight corrective action, which gives you another opportunity to go long on the stock. It is trading at the moving average confluence of majority of the short-term moving average. And there's a good probability that once the bounce goes on the expected lines, you can look forward for targets of 527 and 535. Keep a stop loss of 504 on this trade. Second recommendation is in the reality space. The stock name is DLF. The current market price for this stock is around 845. Again, a strong technical structure, range bound consolidation since last couple of weeks. But the way the setup is, the probability of the stock moving for the targets of 877, which is our first target, and 891, which is the second target, looks high. And on this trade, you can keep a stop loss of 832.
Okay.